Ladies and gentlemen, welcome back to the channel. Tesla stock yet again today continuing its climb to new all-time highs, or at least we are on that path to get there soon. I believe in the month of December. Now, in today's episode, we're going to be breaking down all of your broader market news today and your Tesla stock specific news. Tesla does seem to be an outperformer relative to the other risk on AI trade. Now, the AI trade yesterday did very well. Today it's taking a little bit of a back burner. It's Friday. It's not a huge shocker, but to see Tesla's stock in the green today is good. It's great, actually. Do me a quick favor before we get into all of this key information. Hit that like button as well as subscribe to this channel. Let me know your thoughts on this down below in the comment section of today's episode. If you guys want to come invest with us and come trade with us, check that link out down below in the description of today's episode. With that said, let's get started. So first and foremost, let's get into what's happening in the broader markets today. You can see the Russell 2000 is the underperforming index, only up 0.09%. NASDAQ is the outperformer today, up 0.69%. S&P is up 0.53%. And the Dow is up 0.43%. You can also see the VIX is down about 1% today. It's a 15.61. The VIX continuing to fall shows there's not a lot of fear out there in the headline S&P, which, yes, this makes sense because the S&P is near all-time highs, but there's still quite a bit of fear out there in single stocks, okay? And you can see this reflected in the CNN Fear and Greed Index. It's kind of hard to measure the fear in single stocks, but if you look at the CNN Fear and Greed Index, the headline number is still in fear. Market momentum is greed. Look at this. Stock price strength, extreme fear. Stock price breadth, still in fear. Although you have seen a recovery in the last couple of days, it's just really been in the last couple of days you've seen this recovery, right? There's still a lot of fear out there in single stocks, not as much of which in the broader index, okay? Put and call options in fear, market volatility is neutral, safe haven demand, extreme greed, and junk bond demand is currently in fear. Now, we did have a new AI investor sentiment survey that came out yesterday showing bullish investors skyrocketed from last week, now up to 44.3%. Neutral investors fell a little bit from 25.3% to 24.9%, and bearish investors fell a lot from 42.7% to 30.8%. So big rise in bullish investors, big fall in the bears. Which, you're going to expect to see that when the headline S&P is near all-time highs. 10-year Treasury yields today are up a little over one basis point today, closer to about 1.5 basis points, sitting at 4.12%. So 10-year Treasury yields have risen about 13 basis points from the low we've seen recently. So yesterday was kind of surprising that risk on small caps, the AI trade did well, considering 10-year Treasury yields have went up recently. Now, we do have some economic data that we will share with you today, but first I want to go through the rate cut probabilities because this is one of the things that continues to move this market. What's the Fed's path in cutting rates? Although I think that's a lot less important than most people think. I think you really just want the AI trade alive and well, and you want the economy doing well. Preferably, you want the consumer to get stronger. You want real estate to start moving again for volumes to pick up and inflation to continue to fall. What the Fed does with their federal funds rate, I don't think is too important. Next year, all things considered, if those other areas get better and improve, you don't need to see rate cuts. Now, December 10th, you're going to get a rate cut. There's still like an 85% chance of this. It's not going to move around a whole lot. You're going to get a rate cut December 10th, okay? January 26th, that is what is going to move based on the economic data that we get. And surprisingly, let's refresh this to make sure we're up to date here. It doesn't look like there's a whole lot of movement in the probability of a January rate cut as of today. The odds of a rate cut for January 26th, 2026 stand at 27.3%. there's a 62.3% chance of a pause of no rate cut. For March 18th, the odds get a lot closer. The odds of a cut in December and then a cut in March stand at 38.7%. That's actually down a little bit today from 40% yesterday. So like 10-year Treasury yields rising, the yield curve rising a little bit today based on the economic data that we got, and which we'll go over in just a moment, are dropping rate cut odds a little over 1%, which could be putting some pressure on that risk on trade on that small cap, specifically AI trade. The odds of a cut in December and then no cut in March stand at 45.5%. And currently, as of now, the markets are pricing in a cut in December and then a cut on April 29th. The highest probability here is for a cut at 40.3%. The odds of only a cut in December and then no cut in April stand at 36.4%. So again, with the economic data that we get from here, you're really not going to move the odds of a December 10th cut. Like, that's going to happen regardless. But you are going to move the odds for January, March, April, and deeper into 2026. Okay, so for core PCE price index month over month for September, you came in line with estimates of 0.2%. That was the estimate. You came in line. And last month that we had was at 0.2% as well. Personal income month over month came in at 0.4%. You were expecting 0.3%. That is in line with last month's reading here. Personal spending month over month came in at 0.3%, in line with estimates, but down from last month 0.5%. Last month was actually revised down from 0.6% as well. So on face value, these September numbers look in line or slightly better than expected. The Michigan Consumer Sentiment Survey today is where some of the more shocking implications are. Okay, so keep in mind, the Michigan Consumer Sentiment Survey is a survey of like 200 people and 70 to 80% Democratic. So they tend to believe, the economy is going to suck and inflation is going to be high. But that is not what we got in the numbers today, which is shocking. The headline number came in at 53.3 versus estimates of 52. Last month was at 51. So you came in better than last month and higher than estimates. Look at this. 5-year inflation expectations came in at 3.2%. Last month, you were at 3.4%, and the estimate was 3.3%. This is the lowest 5-year inflation expectation, like in the next 5 years going ahead, people's expectations, in 11 months. Okay, so people have not felt this good about where inflation is headed in a while. Okay, 1-year inflation expectations came down to 4.1%. From last month being at 4.5% and the estimate being at 4.4%. So you were expecting 4.4%, you came in at 4.1%. This is, again, the lowest level in 11 months. The only time we were lower than this was January 2025. Okay, now you're still elevated compared to where we were in, 2024. Again, it's a Democratic survey, but like that that should be known. Even back in 2022 and 2021, when inflation was 9%, the highest inflation expectations got over the next 5 years was 5.4%. Back in April and May, you hit a high of 6.6%. Just to show you again how political this data set is. Nonetheless, the markets pay attention to it. So an 11-month low today in inflation expectations is great. But consumer expectations came in way ahead of expected or expectations at 55.0 versus the consensus number here at 51.2. So a big strengthening in consumer expectations. Current conditions came in at 50.7 versus expectations of 51.3. So honestly, I feel like the rate cut odds should have went up today on the data that we got. So I don't think that makes a whole lot of sense, just considering inflation expectations fell. But consumer expectations improving so much would be the thing you'd point to possibly why rate cut odds actually fell a little bit today and put a little bit of pressure on that risk on trade. And again, you can see here the University of Michigan survey here. The short and long run inflation expectations fall to 11-month lows. So I'm actually a little surprised that, again, rate cut odds are not moving up further down the curve. Now, China's Vice Premier He Lefeng held a call with U.S. Treasury Secretary Besson and U.S. Trade Representative Greer. He says, quote, "We agreed to promote stable development of economic and trade ties." He says, quote, "Both sides agreed to expand the list for cooperation." Bank of America says the market could soon price a January Fed cut. Bank of America says markets might start betting more aggressively on a January rate cut despite the Fed's cautious messaging. The bank expects a 25 basis point cut in December with tougher guidance and several dissents, along with projections showing stronger growth and lower inflation. Bank of America doubts Powell can credibly push back against expectations for further easing, given the heavy data flow before January, with markets focusing on incoming numbers. Analysts say Powell is unlikely to shift expectations away from data dependence. Donald Trump says today, "I have approved tiny cars to be built in America." Kevin Hassett today says the AI economy is moving faster than the 1990s dot-com economy, but the shutdown had a bigger hit than expected. Now, Kevin Hassett says he backs Besson's view on the Federal Reserve Bank and presidents. He says he has not discussed the Fed president's issue with Trump. He says that it would be a massive disruption if the Supreme Court nixes tariffs, like the government would have to give out refunds and things like that. There's already a bunch of companies signing up to get refunds if the Supreme Court does rule against Trump's tariffs. Now, White House senior advisor Kevin Hassett says that the 232 and 301 trade measures are among the backup plan. Kevin Hassett says he would be disappointed with 3% growth for Q1 and Q2. Hassett says there is massive momentum into next year as factories open. Kevin Hassett says we could be looking at a 4% productivity figure for 2026. And Hassett says there will be a bigger rebound in the first quarter because the government shutdown hit harder than expected. And Hassett says it is time for the Fed to cautiously reduce rates. Prime Minister Mark Carney of Canada has said that Canada's trading relationship with the U.S. was once a strength, but now a weakness. Layoff announcements top 1.1 million this year, the most since 2020's pandemic, per CNBC. Also in the news today, for anyone investing in this area, the U.S. is planning more stakes in minerals companies, per Bloomberg. Now, at the time of recording today's episode, Tesla stock sitting at about $456 per share. Really, again, that critical level was the 50-day moving average, around $435 per share. It is now, in my opinion, only a matter of time before Tesla hits new highs and breaks into the 500s, likely in December. I don't know when the exact date is going to be. We do know next week's Fed meeting, Jerome Powell Day, on Wednesday is going to be critically important on December 10th. That's going to these days are always important. Now, you can make an argument that it's less important because we're heading into 2026 and we're going to get a new Fed chair, but we get a lot of economic data on December 16th. So I think December 10th might be a let's burn one kind of a Fed meeting until we see what the data looks like, okay? The Fed's going to be kind of neutral overall. They're not going to tell you a whole lot in terms of their plans for, cutting rates because the data is going to tell us a lot and expectations are going to change, specifically around inflation. Everyone always focuses on, how strong or weak the economy is, and that's the deciding factor to give us rate cuts. Also, if inflation comes down more than expected, that is a deciding factor to give us rate cuts as well. Now, in the news today for Tesla, global battery energy storage system shipments exceeded 100 gigawatt hours in a single quarter for the first time ever in Q3 2025, with Tesla as the top supplier. Okay, and we're still in very early innings for this industry. You can see Tesla here with the largest piece of the pie, which is crazy to think, like, even 2 or 3 years ago, that the energy division of Tesla would become so, like, Tesla the car company. No, Tesla the energy company. Tesla the AI company, okay? That is Tesla. Now, Tesla's FSD Supervised stuns Germany's biggest car magazine. Robin Hornig of Auto Build on his experience says, quote, Tesla's FSD Supervised sees more than I do. It doesn't get distracted and never gets tired. I like to think I'm a good driver, but I can't match the system's all-around vision. During the Berlin test ride with Germany's largest automotive publication, a Tesla Model 3 running FSD V14 handled complex traffic, construction zones, braked early for pedestrians, and yielded politely on narrow streets. Like, yeah, FSD V14 is damn near unsupervised. Like, I think Tesla internally, they're like FSD 15, that is going to be unsupervised. And I think that comes in the next 12 months. And as Elon said before, that is the next big value unlocker for Tesla. Tesla has launched the Model Y Standard in the UK starting at 41,990 euros versus 48,990 euros for the Model Y Premium rear-wheel drive. Deliveries begin in January 2026 with the first test drives available next month. Tesla has also just launched the new Model 3 Standard in Europe. Tesla has also introduced a bunch of new promotions in the US, like 0% APR financing for the Model Y Standard, 2.99% APR for the Model Y Premium, one free upgrade on eligible Model 3 and Model Y inventory, Model Y leases and Model 3 leases anywhere between $300 and $450, Model X lease from $1,700 a month. That's wild. Why does that sound so expensive? I know the car is expensive, but why does that sound so expensive? That's with $7,500 down. Subaru has announced that its new EV called the Trailseeker will start at about $40,000 when US deliveries start in early 2026. Tesla has resumed paid advertisements for their vehicles on YouTube. Tesla Semi gets a huge vote of confidence from 300 truck driver fleets. Keller Logistics Group, a family-owned carrier with over 300 semi-trucks operating in the Midwest and Southeast, completed the session to assess the Tesla Semi's fit for its operations. Elon Musk says that Tesla's FSD V14.2.1 lets you text and drive depending on the context of surrounding traffic, one step closer to FSD unsupervised. This is a big deal. That's basically unsupervised FSD. Like, you can text and drive, that's unsupervised. Over on Kalshi, you can see there is a 50% chance that Tesla releases unsupervised self-driving by next summer. And you can see here the Tesla Europe and Middle East X account posted the video of the mayor of Rome that tried FSD supervised in the Eternal City. Waymo has announced that they are now fully autonomous in Houston, Texas, meaning no driver at the wheel. This is great news for Tesla because it means, hey, Waymo got the pass here. It's going to be a lot easier for Tesla to do so as well in the Houston area. Here we have a review of Tesla's FSD Supervised in the Wall Street Journal, which does tend to lean towards hating on Tesla and Elon. And I'm just going to read this first paragraph here. It says, quote, driving has always felt like a chore to me. The first time I let the vehicle, the Model Y, take control, something shifted. As the car guided itself through traffic, I felt tension melt away. A few days before the federal EV tax credit expired in September, I traded in my 7.5-year-old Model 3 for a Model Y with FSD. We can also see in the news today, Tesla's Model Y L is now sold out in China for January 2026, with estimated delivery wait times for new orders now showing February 2026. So the demand story in China is exceptionally strong. Now, short sellers today look to be covering on about 515,000 shares today. Short interest kind of going back and forth. It's not moving around a whole lot. Some days you get 500,000, 1 million shares being covered on. Some days you're getting 500,000, 1 million shares being sold short. It's kind of going back and forth in that sense. But I do think once we get a finalized reading soon for short interest, you're probably going to see it come down a little bit since Tesla stock has broken out above some of these key technical levels. And I really think it's just a matter of time before you see a larger rally in Tesla stock. Now, as far as option activity today in Tesla from hedge funds and institutions, you have 141 different trades totaling $108 million with a positive order value of 53%. So it is slightly neutral overall. Now, Tesla stock at the time of recording this video, you could see Bitcoin is actually coming back down a little bit to about $89,200 today as the Japanese bond yields continue to move higher, and there's more pressure on that yen carry trade in the past 24, 48, 72 hours or so. Tesla stock is now down in the red about 0.3%. Again, not a problem in my opinion. As long as we stay above that 50-day moving average, it is inevitable that eventually you are going to see a breakout above this. You're going to see a larger rally start to take place in Tesla. And I think ultimately by December 31st, Tesla is going to be well over a $500 stock. Almost inevitably at this point. So question is, what day does it happen? If you're trying to trade this, that's a totally different thing. But for the long investors out there, the people that have just bought the stock over the years and continue to hold it, I think a large upside move is coming soon. That is it, ladies and gentlemen. That is everything you need to know on this market today and Tesla stock. Hit that like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, have a great one, and I will see you in the next one.